Hello everyone, Ladislas Maurice from the wanderinginvestor.com. So today I'm in Frankfurt at the Deutsche Goldmesse, which is the German gold show, together with Lobo. Lobo, how are you?
Good to see you in person, Ladislas.
Yeah, finally, after a few years of collaborating together, and I've been reading your newsletter for quite a few years, it's good to see you in person.
For what it's worth, he comes across live like he does in the videos. Same guy. What you see is what you get.
Thank you. Same with Lobo. But you like wine more than I thought you do.
Well, I answered questions for 4 hours last night. I needed to keep my whistle wet.
Yeah, no, it was really good. Last night, Lobo organized a session here, a separate session for people who subscribe to his newsletter. It was 4 hours long of just pure questions.
Q&A, yeah.
Yeah, you really got drilled there.
It was good.
Cool. So what we'll be doing it essentially, I'll be asking 4 questions, which I thought were really interesting last night, and which I believe that people can learn from. The first one will be related to the difference between gold and the gold miners that haven't been doing well as opposed to the price of gold. Then we'll be discussing whether Mexico is investable or not from a mining point of view. We'll then be discussing the platinum and palladium market, whether it's time to bottom feed or not. And then finally, we'll be discussing rare earths and potential sanctions on China, etc., what the impact could be there and if there's a play to be made. So, Lobo, first things first, gold shot up past
2,400,
now 2,400, 2,300, but the miners are just not moving. What's happening?
Well, first, not all of them are not moving. And if you own a gold stock that is not moving with gold, you have a problem and you need to ask yourself some hard questions. I've been doing this. I have some underperformers and I need to ask myself, have I made a mistake? Is there something wrong? Is Mr. Market passing judgment? Because if gold goes up, and okay, we'll get to the underperformance, but if gold goes up and your gold stock doesn't move at all, something's not right. Maybe the market's missed it. Maybe I've made a mistake, but you need to have an honest conversation with yourself about that. But the thing is, okay, most of the better gold stocks at least, or most gold stocks actually have responded to gold, but not enough. If gold goes up and the gold stocks goes up proportionally, why would we own the stock? With the stock, we have counterparty risk. You know, the company could do everything right and this Mother Nature doesn't deliver the discovery, or they do everything right and the government nationalizes their mine, or so many things can go wrong. If the gold stock is just going to mirror gold, why bother with the company, right? Why not just buy the metal? So it's not good enough that the stocks have moved. They have to deliver the leverage or there's no point. And so, you know, one answer is just, well, it'll get there, right? In history, the gold goes up 1 or 2%, the stocks go up 5 or 10%. That's why we own them. But in this case, you know, it's just, we have to face the fact. Look at it. Those alligator jaws between gold and gold stocks continue opening. And again, Mr. Market is telling us something. Now, in this case, I don't think the market is right. I think Mr. Market was telling us something. The market was telling us that gold had spiked and it was going to go down, and the stocks were leading the metal. The smart money didn't think that $2,000 plus or minus gold was a real price or a sustainable price. In 2020, that was a spike, which looked kind of like 2010 and 11. And then after 2011, you know, gold hit almost 2,000, and then it went into a 5-year bear. So that's the recency bias. That's what investors who even pay any attention to gold at all remember, was gold spiking and then going down for a long bear. So gold spikes in 2020, and I think the expectation has been that the next big move was going to be down, and the stocks have been leading in that direction. But they're wrong. So I think the alligator jaw chart is going to close, not with gold coming down to meet the stocks, but with the stocks coming up to meet gold. So that's my main answer is I think there's been a widely held expectation that the gold thing was transitory, right? It was just a COVID thing and it's gone now, right? And the whole sector is going south. But on top of that, there's also something that our friend Rick Rule has talked about, and that's that the companies have actually underperformed in the actual business of mining gold. And he likes to say that from 2001 to 2011, there was a 7-fold increase in the price of gold, but the free cash flow of the top miners went negative. And it takes real talent, is the famous Rick Rule quote, to turn, higher, prices of your product into worse margins. So that's another recency bias, if you will. The smart money that paid any attention to gold miners at all saw that they flubbed it last time and they didn't make money the way they should have. So this brings us to today, dear audience. There's a very important thing happening right now, and that is this earnings season. We're starting to see how the miners have done with record gold prices, or the gold-dollar exchange ratio, at least at nominally high levels, right? And the big three, Barrick, Newmont, and Agnico, have all beaten on guidance. And we're still not done with earnings, but that's, I think, a very encouraging sign. If gold had gone way up and the big boys in the space flubbed it again, and their margins didn't increase, they weren't making any more money, well, it would actually be rational to ask yourself, why the hell would I want to own these stocks? So I think it's actually quite important what we're seeing happening right now, and one quarter isn't going to be enough to convince the Warren Buffetts of the world that gold is a good business, but a couple quarters will do a lot to convince a lot of people. And it could be happening at a perfect time. If I'm right, my overall economic outlook is still for the hard landing. I think the new labor report out of the U.S. shows surprising weakness. That pillar of strength of the U.S. economy, that labor consumer, if that's starting to crack, I think that's a big deal. So it's important not just to say, yay, gold, I think gold's going up. To your question, it's a key question. We don't just buy the metal, we speculate on the stocks. And if the stocks aren't going to deliver for us, why bother? What's happening in the marketplace right now, I think, reaffirms my faith, if you will, that the gold stocks will outperform the metals. And I think, I'm personally betting a lot of money that that's going to come true, and I think it's going to happen this year, and I think we're going to do very well.
Would you say the majors are the ones that are going to move, or will the juniors also go wild?
Well, the conventional wisdom is that when the market turns and interest comes in, the money goes first to the majors. They're the household names. When Barrick and Agnico reported, we knew, but nobody else knew. When Newmont reported, it was headline news because it's the largest gold company in the world, and the stock went nuts on that day. So mainstream financial media covered it. And it's not because Newmont's the best mining company in the world. I don't own it. But it's because it's the biggest. It's a name that caught attention. And, you could look on Bloomberg and the sector, their eye chart and so on. Materials moved that day, and the big mover was Newmont. So they had to talk about it. They couldn't even pronounce it, but they had to talk about it, right? So, yeah, I think this is very important. I think we're starting to see a delivery, but no, it trickles down. And the past, if past is prologue to the future, no guarantee, but in the past, the money goes to the go-tos, and then it trickles down the food chain, and yes, it does get to the juniors. But that's sort of a vague thing, like why would it do that? Or there is a transmission mechanism, though, and that is something else that we are also seeing happening this year, and that's M&A. And there's been a lot of consolidation at the top, actually more than I thought. It's surprising to me to see this BHP Anglo deal going on right now. I'm not sure the industry needs that much consolidation, but there's only so much consolidation at the top. Who else are you going to buy? And mining is by its nature a self-depleting business. Every shovelful you take out of the ground is one less you have, unless you find more. And when you're doing belt tightening, your exploration team is the first crew that you fire. And then they go off and start junior companies, and the cycle perpetuates itself. What I'm saying is, if nothing else, the fact that mines deplete themselves forces the larger players to buy the successful discoverers. So that does push the money down the food chain one way or the other. If the market ignores the juniors, the takeovers won't. The companies in the business will have to. But I don't think the market will. If this becomes, a flavor of the day, if, gold did make headlines, has been making headlines this year. Gold at 2,400 got a lot of mainstream attention. If it resumes that climb, goes to 2,500, or JP Morgan is calling for $3,000 gold, not Lobo Tigre. But if it goes there, the media attention will be phenomenal.
Yeah.
And I do think, greed is part of human nature. The needle swings from fear to greed. And yes, I think we'll see, I'd like to say that only the best gold stocks will respond. I think they'll respond the most and the best, but probably the rising tide would lift almost all ships.
I mean, to your credit, when I last interviewed you a few months ago, your call for your favorite metal for 2024 was gold, and you've been pretty spot
But
on
to
with
be
this.
clear, it's not gold every year.
Yeah. Yeah.
I'm not the broken clock being right here. Last year, or for 2023, it was uranium. For this year, it was gold. And but I have to say, it's not up for the reasons that I thought it would be. Like the reasons, the recession and the money helicopters, all that stuff hasn't happened yet. So on the one hand, it makes me a little cautious because we've already at 2,400, okay, we've pulled back from there, but we've already hit a level that I thought we might hit by the end of the year, 24, 25-ish. So if I'm already paid in advance for that, then it makes me a little bit cautious. But if the reasons why I thought we'll go up are still in play and still ahead, and we're going into that now from a higher level, we could end up with much higher gold by the end of this year than I thought we would. So kind of exciting times.
Cool. All right, let's move on to the topic of Mexico. So Mexico has passed a number of anti-mining laws in the past few years with AMLO in charge of the country, and it would appear that Claudia Sheinbaum is going to be elected as the president in Mexico. She's
Next month.
Next month. She's an environmental engineer. And apparently she's very anti-mining. So, Lobo, has Mexico become uninvestable from a mining point of view?
Basically, yes. Sorry to say. If I didn't have any exposure to Mexico right now, I would absolutely not buy anything. Not gold, not silver, not oil, nothing in mineral extraction in Mexico right now. I would not risk another dollar. I do have Mexico in my portfolio. I haven't sold it all yet, but it's all on hold. Every single one of them. It doesn't matter how well the company's doing, whether they're discovering more with every drill hole or whether they're mining more and making money. It doesn't matter. They're all on hold. I wouldn't put another dollar at risk in Mexico until we see things improve. As far as why haven't I sold, well, I just did some due diligence down there, my boots on the ground, man on the street interviews and things. There is a chance for an upset. It's not just that Claudia is the anointed successor of the current president, and the current president has enormous power to get their chosen successor into office. That is the tradition in Mexico for 100 years. It's the way it has almost always gone. But it's not just that. AMLO's a populist, and people with any business sense see him as an absolute disaster for Mexico. But that included giving pensions to people who had no income and other popular things that have cemented a fair amount of support. So the polls all show that Claudia has a 60-40 margin over the challenger, Xochitl. But the scoop, such as it is, the sense is that in the same way the U.S. has a liberal bias in the media, Mexico has that pro-AMLO. And so there's a sense that the polls are wrong, that the polls are underestimating, and that the challenger, Xochitl, could do something like Trump in 2016 and surprise all the pollsters, surprise the establishment, that there'd be a lot more support. And there is evidence for this. Xochitl, the challenger, she has support from the so-called right-wing party, the PAN, and the hard left party, the PRD. Both support Xochitl over AMLO. So he's hated enough that such strange bedfellows would get together to support an opposition candidate. And that's pretty striking. I mean, you couldn't have more opposite people getting together in Mexico than the PAN and the PRD. So I'm not saying, therefore, it's safe and she's, the underdog's going to win and buy now while prices are low. I don't know what's going to happen. But there is potential here for a change, a surprise. And that's one reason why I haven't been in a rush to sell. But if Claudia wins, I will, and I'm thinking about how to best strategically implement sells and what I'm going to do with my own portfolio. But the key takeaway here is that it looks like the base case assumption here is that Claudia wins and she's bad for mining. And it's not just her attitudes or whatever. AMLO has proposed a constitutional ban on open pit mining, and Claudia has said she supports this. And constitutional ban, okay, you can say, well, it's just open pit mining, but, well, A, it's the most important kind of mining in Mexico, where the big mines. But even if it's just open pit mining, it's still such an aggressive move. And to actually get it enshrined in the Constitution would be such a big deal that I think the investors globally would just say, that's it. And it doesn't matter if your mine is underground or you're just exploring. It would be so harsh, anti-mining, that basically all Mexico plays would underperform. So I wouldn't want to get ahead of that harm. I would want to get out of harm's way. I'm sorry I don't have better news. I love Mexico. Well, my mother's from Mexico, so I'm not being anti-Mexican, but that's the way I see it.
Do you have Mexican citizenship?
Yeah, you would ask that, wouldn't you?
I have to.
Yeah, right.
Little known facts about Lobo.
It's on the to-do list. I could. I should be able to do that, but the documentation necessary has proven difficult to pull together, and it just hasn't been enough of a priority for me to do that. But I really should.
I can help you with that.
Okay.
By the way.
All right.
Cool. So let's move on. So be careful with Mexican mining companies for now. Essentially, that's the message. Cool. Let's move on to platinum and palladium. So when you look at platinum, on looking at various ratios, if you look at platinum miners.
Go ahead and stop. I'll just jump in. Forget the ratios. Forget all that stuff. Platinum and palladium are industrial metals. I'm still on team hard landing, and you don't buy industrial minerals ahead of a recession. Now, if you think I'm wrong, if you think Biden and Powell kiss the boo-boo and everything's going to be fine, we're going to there's going to be no landing, just straight off to happy days, off to the races. Okay, well then there's a case for both platinum and palladium as industrial metals. We call them precious. It doesn't matter how expensive they are. They're not monetary metals. They're not going to respond to inflation the way gold and silver do. But my base case, and I think the latest data supports me. We've just been talking about cracks in the labor market. That's a huge deal in the United States. So I still expect the hard landing. And the fact that platinum is so much cheaper than gold, and it shouldn't be because it's more rare, doesn't matter. It's an industrial metal. If we're going into recession, it's going down. And that it's already cheap or too cheap or stupid cheap doesn't matter. Recession's coming, they're going down. That's my view.
And what about it would appear that a lot of EV sales are not quite making their targets, and some people seem to be reverting to traditional ICE vehicles.
Yes, right.
Is this a potential catalyst, or is it overblown?
It's overblown. First, it's just overblown. Yes, you get a change and you get these exciting headlines, but the EVs are still there. They're not going away. Okay, Tesla sold fewer than they wanted to, but they still sold a ton of them. And BYD sold fewer than they wanted to, but they still sold twice as many as last year. Right? The EV adoption has not stopped. The fact that it's gone from this to this, it's still increasing. And the other thing, we talked about this last night, is that in a recessionary environment, auto sales are one of those things that takes a big hit. It's the sort of thing that if you don't have to buy a new car, you don't. And if the old clunker can go for a few more years, well, you make it go for a few more years. And these days, what people consider a clunker is, the paint's faded. So here's the thing. I think that if we have a recession, not if, I expect the recession to become undeniable in the United States. And I expect the instant response to be for the money helicopters to fly again. So it won't be a typical recession, which they usually last a couple years. I think this one, the fiscal response, if not the monetary response, or both, instantly tries to paper that over. But that doesn't make people comfortable to go out and make a major purchase like a new car. So there's a chance here that even if the money helicopters fly and inflation goes up and commodities go, auto demand still remains weak for a year or two, and that keeps platinum and palladium under pressure, even if oil and copper and other things are going up. So you could say that I hate platinum and I'm reasonably bearish on PGMs, but I just think it's very dangerous to bet otherwise. And let's say I'm wrong, I missed the boat. It's okay, you can't kiss all the girls. I'd rather miss this boat than gamble on an industrial metal in front of what I see is coming I think what I think, right? I think we're headed for recession. They're industrial metals. And sorry, to the EV adoption question, there's a case to be made here that, okay, EV adoption slows, but it's still growing and growing and growing. The Chinese have a $10,000 EV that they're bringing to market now, not somewhen, not someday, not Elon Musk promising a cheap car forever. They have a $10,000 EV now. And okay, the U.S. might ban it or tax it or tariff the heck out of it or whatever, but the rest of the world is going to buy these things. So this is going to impact the purchases of internal combustion engines. And there's an argument to be made here that if people put off car buying decisions for a couple years, that's enough that by the time a couple years from now they start buying cars again, the EV options for them, Elon might finally have his $20,000 Tesla by then. And at that point, you might not buy an ICE engine. So I'm not saying that platinum and palladium will never come back, but there is a scenario, a recession-based scenario in which they never come back. That could happen, so buyer beware.
Thank you. So let's move on to...
That was such an enthusiastic thank you. Do you own a lot of platinum?
I don't.
Okay.
A little bit, but not a lot.
All right.
Let's talk about rare earths, because a decade or a decade and a half ago, there was a bit of a bull market in rare earths because China decided to restrict the export of some of these rare earths. And that's when the world realized that, oh, we're very dependent on China when it comes to rare earths. So we're now in a situation where we have Western politicians in charge that are openly discussing sanctions on China. So isn't there a very high likelihood that in the near future or in the medium term, China will put export restrictions on rare earths to put Western supply chain in
very
problems?
clearly. Yeah.
So,
is there a risk? Yes, there's a risk. Is there a high probability? Well, it's hard to say. Like if the U.S. puts sanctions on China's $10,000 EV, will they respond with a rare earth tit for tat, or will they do something else? They have a lot of different levers they can pull. So in this, and unfortunately, it doesn't matter who wins the U.S. election. Both Biden and Trump are anti-China. It's a popular thing with the voters. I think almost anybody who ran today would have to be tough on China. So the U.S.-China conflict heating up, I think that's baked in the cake. Doesn't matter who wins, what happens, that's going to continue accelerating. Now, will it make another round of rare earths going up? That's an if, not a when question. But I have to say that the chances look pretty good. Like, that is an important thing, and we've seen it already. I think it was in response to the chip restrictions to China. China put restrictions on gallium exports. It's one of those metals that goes into your phone and tanks and military applications and a lot of stuff. So they've already shown that they're willing to pull this lever. They've done it before with rare earths. They've done it recently with gallium, so critical minerals. So I think the odds look pretty good. But then this comes to the other thing, is that rare earths is another misnomer. They're not rare. They occur all over the place. Economic concentrations are more rare, but we have higher grade deposits, many of them in Canada, some in the United States. They exist around the world. So when people say that China controls the rare earth market, well, they don't control it because they have a chokehold on it. They control it because they have low prices. The reason why 90% of these things come from China is not because they can't come from anywhere else. It's because between low-cost Chinese labor in the past and some level of subsidies now, China's still the lowest cost producer. And they also have processing technology that, because they've been the low-cost producer, has been more advanced in China. And that's the harder thing to do. There are rare earths in other places, but the processing is not so easy to at least instantly build up. But the powers that be in the West are working on this. So this is one of those things that if it happens, or maybe even when it happens, there's no knowing how long it will last. And the powers that be in the West are already gearing up for this. They're already giving subsidies to companies in the West that are building not just mines, but processing facilities. There are grants and subsidies. Canada's working on it, the US is working on it, Europe's working on it. Nobody wants to be dependent on China for these things. So how close are they? If China put a total ban on rare earth, never mind the raw products, but the processed products. If they put a ban on that, or a really high tariff or an export barrier on that, that would have an instant impact. Prices would go up. The costs, the input costs, this would be very inflationary for almost everything, electronics, war machine. But I don't know how long it will last. So the takeaway from this is, if you want to speculate on rare earths, I haven't done that myself yet, but if I did, then I would want something that has a very short fuse. Like, I would not get into grassroots exploration, right? I would want to look at something that, like, they're building the mine now, or they've made this discovery and they're trying to raise the money to build the mine, and all they need is the money. They have the permits, they have the feasibility study, they have everything, they just need the money. And if China slams the door shut, prices go up, then I think the money will be there. So that would be the sort of thing where, if I have a very short fuse on my speculation, and then as soon as it goes way up, I can get my initial investment back, and then whatever happens with China, whatever happens with the geopolitics, doesn't matter, I can't lose, right? And then if it keeps going up, great. And if not, I take whatever profit I have and I move on to the next thing.
Cool, clear, thank you. Look, Lobo, thank you very much. I really recommend Lobo's newsletter. So he has a free newsletter with weekly macro updates and analysis. You send just like one email per week. Personally, I've subscribed to your paid newsletter for a few years now. I really recommend it. But you can just sign up to the free newsletter. There's a lot of value there as well. There is a link below.
All right, thank you
Lobo,
very much.
Thank you very much. Always appreciate it.
And good to meet you in person.
Make sure to download my free ebook, 12 Mistakes to Avoid When Investing in International Real Estate, which you can find on my website, link below. And feel free to follow me on Instagram @TheWandering Investor. I look forward to hearing from you.